Hey everybody, Dan Chapman here, Fairway Independent Mortgage in Valencia. What's going on? Policino, real estate team, Sean Policino, out there in the land of Range Rovers and Bentleys and reality TV people who I won't name. Hope you guys are doing well. Just wanted to give you some information on the cost of waiting analysis that I posted on my Facebook page the other day. You guys can watch that video. Sean can share it with you. I shared it with him. If you go to Facebook, Dan Chapman Loans. This is something I've been doing for clients that are on the fence, thinking about waiting, not buying. I've been able to turn some waiters into buyers recently with this. I truly believe rates are going up. They're going up fast. They went up an eighth last week between Thursday and Friday alone. So there's multiple reasons for that. Values in some areas are still going up. Some areas they've stabilized. I do a lot of business in Seattle. I'm up in Kirkland, Washington, about 1 week every 4 to 5 weeks. And the rest of my business is down in California. My office is in Valencia. But I want to show you guys the buy versus rent and the cost of waiting analysis so that you can share with your clients. I can help you out with this anytime. So let's dive right into that. And let's go buy versus rent. This is really mind-blowing for those people that are renters and they like to pay their landlord. I don't. Here's a sample of $3,000 rent, and I didn't hit save. So $3,000 a month rent. Save. I gotta hit save there. I can export this. I can email this. I can email the link. So rent 1 year right there, $3,000, annual increase of 3%. What it looks like in 10 years, you'd be paying about $3,900 a month. This factors into with $40 a month rental insurance, and it gives the net down here. This is your monthly cash flow difference. I mean, your cash flow difference over 10 years. I customize this. I can customize it any period of time I want. I just did the 10-year comparison. This is comparing a $600,000 purchase at 10% down at a 30-year fixed at 5%. Today's rates, with closing cost of about $9,000 total. I can go down here and figure out what their home ownership 10 years before selling. I can customize this. I can put whatever number I want, 5, 7, 10 before selling. Appreciation here, I'm going to go forecasted because it's lower than historical. Tax bracket, I can factor that in there, put all that in there. And what happens is when it runs the numbers, it runs your appreciation gain over the forecasted appreciation rate over 10 years, $462,000. Amortization is what you would have paid down the loan. You'd have paid down the loan about $100,753. It factors in cost to sell at 6%. It factors in the tax bracket that you're in. I just put 24% tax bracket, married couple. So it factors that future value of $1 million, $62,000. So that is how it comes to show the cash flow difference, amortization gain, appreciation gain, all these cost to sell, net gain of buying a home over 10 years is $475,000. If you were to keep renting, if somebody was to keep renting, they would have paid their landlord $417,500 over 10 years. Can you believe that? Is that crazy or what? We can teach and educate our clients how to build wealth in real estate. This is just obviously a primary residence, but the goal is to get it paid off for people eventually, or buy more property with the equity in it. Let's look at the loan cost of waiting analysis that I wanted to show you. That's the buy versus rent on a $600,000 purchase, comparing the two. Cost of waiting, we can do one on the same, but let's do this one at $900,000. Some of these are Washington clients, some are California clients, but here's a California one, $900,000, 20% down, $720,000 loan. Hit the cost of waiting button here. I went in and put 0% increase in value over the next 6 months. it's gonna auto calculate about 3% on that if I didn't put 0%, but I'm going to be conservative and put 0%. And what if the values don't go up at all, but rates go up? So here's the rate today on a jumbo loan with good credit, 4.75, no points. Principal and interest, 37.56. If they wait 6 months and rates go up to 5.5%, which I really feel they're going to go close to that, at least 5.25. I think 5.5 is more likely. Many reasons for that, but then their payment goes up to just about almost $4,100 a month. So that's about $340 a month that would go up if they waited. This is year one after year, 5.75 on the rate. I think in a year from now, that's about where we'll be. And that payment's $44.79. This is the total expenses. This is PITI right here, taxes and insurance and everything. So taxes and insurance right now, with everything, $47.68 on a loan amount of $720. A year from now, over $5,554. That's a significant difference right there. 2 years, you go out even further. This is estimating values go up to 6.6% over the next year. This is 2 years at 11.8 and 3 years at 17%. I can edit these, but this is forecasted. So for instance, 2 years from now, payment could be principal and interest of $55.53 versus today of $37.56. That's a significant difference in buying power. But let's focus on the 6 months to 1 year, because I think that's where a lot of people are at right now. 6 months to 1 year, you're talking about almost $650 between 1 year and today on your payment. That's in buying power. That's about $125,000 in purchasing power that they would have lost had they waited a year if they wanted their payment to be the same. So instead of a $900,000 purchase, they waited a year and rates went up here to 5.75, they'd probably be looking at a $775,000 purchase to get that same payment that they would have got on a $900,000 house. So that's huge difference. So this is your cost of waiting analysis. And then you go down here and it tells you what your total cost was with loss of appreciation and amortization pay down. You would have paid down your loan. So 1 year is loss of property appreciation, $59,490. You would have paid down your loan $11,110. That's a loss of $70,600 in a year. Here's 2 years. And 3 years is $190. It's a lot of money. Again, I put 6 months. I didn't put any appreciation there, so we can customize that. So I want to show you guys this information, and hopefully this helps you guys. And if you have any questions or anything like that, and you want to see any scenarios, feel free to contact me. Sean's got my contact info. You can find me online at danchapmanloans.com. I do this all the time for my realtor clients. So I can also come out there and do a little seminar, a little class on all this and answer your questions too. So that's about all I got. I hope you guys have a great day and great week, and we'll talk soon. Take care.